During this course, we'll discuss how to handle savings in Ynab 3. First, let's discuss the different roles of accounts and the budget. Accounts are where we physically store our money. This is dollars by location. Where is my money? The budget is where I keep track of my plan for my money. This is dollars by job. What is my money doing? The budget does not care where the money is physically. The budget only cares what the money is being used for. By thinking about my money this way, my accounts are more like Tupperware, just storage containers. Now I make spending decisions by checking the budget instead of the bank balance. I check the budget to guide my spending decisions, regardless of whether I'm spending from savings, checking, a credit card. It just doesn't matter as far as the budget's concerned. Before we move on any further into savings accounts and how to set them up, let's first discuss the two different types of accounts in Ynab 3. There are two types of accounts, on-budget accounts and off-budget accounts. First, we'll take a look at on-budget accounts. These accounts either fund the budget or spending from these accounts affects the budget. Checking, savings, and cash fund the budget. Money from those accounts is sent to the budget so we can put those dollars to work. Credit cards and line of credit accounts have spending that affects the budget. Therefore, those accounts are set up as on-budget accounts. Imagine, for example, that in one hand I have a jar of money that represents all the money in my checking account. In the other hand, I have a jar of money that represents all the money in my savings account. Now, I pour both of those jars into a bucket. The bucket represents the budget. Once the money is in the budget, or the bucket doesn't care what account it came from. The budget doesn't care what method you use to pay for things. It just wants to know what you spent the money on. Now let's take a look at off-budget accounts. These accounts do not affect your budget. For example, mortgage accounts, loans, and investment accounts are typically set up as off-budget accounts. People typically set up off-budget accounts because they're tracking a balance, or they want to see all of their debt reduction efforts in one place. You'll see a clear distinction between these two types of accounts in the left-hand side of the screen. On-budget accounts appear under the Budget tab. Off-budget accounts appear under These accounts don't affect your budget. Savings accounts are on budget in Ynab 3 by default. Before we discuss how to handle savings once it gets to the budget, let's take a look at why people have savings accounts. Some people have savings accounts to earn higher interest. This is certainly a valid reason. If I put my money in this account, I'll earn more. Some people place money in a savings account to protect it from themselves. Often people feel there is less of a chance of spending it if it's not in the checking account. Lastly, people set up savings accounts for different savings goals. They may set up one savings account for taxes, another one for emergencies, one for vacation, and so on. However, this can create a lot of unnecessary work. With multiple accounts comes more accounts to track, more statements, perhaps more 1099 forms at the end of the fiscal year. This also means more transfers between accounts. So let the budget do its job. The budget is designed to keep track of your plan for your money. Isn't savings a part of that plan? The budget is a much better tool for this and can make things much easier. Instead of creating multiple savings accounts to track goals, use savings categories instead. So let's set up a savings account and show you how you can use the budget to save more effectively. Before setting up savings in Ynab, make sure error checking is enabled. This feature is necessary in order for the following directions on savings to work correctly. Error checking can also help you by making sure that you categorize transactions accurately, and it will prevent you from making mistakes. To enable error checking, go to the File menu. If you see the words Enable Error Checking, click to enable. If your file says Disable Error Checking, then error checking is already on and you are all set. There's nothing for you to do. So now let's look at how to set up a savings account. While Ynab can easily handle multiple accounts, you may find you only need one. Begin by clicking the Add Account button on the left-hand side of the screen. Fill in the information in the pop-up that appears. Enter the name of the account, the current balance, the date, and under Account Type, choose Savings. Click Create Account when you're done. Now let's demo this in the software. I'll set up a savings account with a balance of $1,000. I'll click on the Add Account button and enter the information in the pop-up. I'll click Create Account. The account is created and a tab appears on the left-hand side of the screen showing the balance. The starting balance has been categorized as income available this month. This way, the money is sent to the budget so that we can put those dollars to work. Let's discuss the merits of having specific savings goals. Prior to using Ynab, I was one of those people who was never able to save any money. Every time I was paid, I would faithfully put money into savings, every time. But sure enough, before the next payday, I had moved that money right back into checking because I needed it for something. Once I started using Ynab, I was able to change this behavior by asking myself one question. What are you saving for? Answering this question allowed me to truly save. I decided on the things that were important to me. All of a sudden, it wasn't simply a case of moving money from savings to checking, but rather taking money away from something that I was saving towards. Here's a case in point. Last winter, I purchased my dream computer, a 17-inch MacBook Pro. It took me a year to save for it. I set up a category in the budget and each month assigned some dollars to that category. During that year, there was nothing that would have enticed me to take money away from that category. You see, it wasn't just an issue of shuffling money between accounts. If I moved money, that would be delaying the purchase of my MacBook Pro. The other benefit of having specific savings goals is that when I finally went to make the purchase, there was absolutely no guilt. I knew I could afford it because I had budgeted for it. By setting specific goals, you'll find that your savings is more effective. It's important to save not only for things you know you need to be ready for, like emergencies, taxes, or car repairs, but also for positive things that are important to your life as well, like a vacation or a new computer. Let's discuss how to set up those savings categories. Some people find it helpful to group their savings subcategories under one master category. This isn't necessary, but it may help you focus on savings goals. After you've entered the starting balance, just budget those dollars toward your savings categories. Let's take a look at how this works in the software. To add a savings master category, I'll click Add Category and enter a name. Then I'll add my specific savings goals as categories. I'll hover over savings until I see the Add button. Then I'll click on it and add subcategories. These are my savings goals. Now I'll budget the dollars in my savings account to my savings categories. I'll put half of the $1,000 toward my emergency fund, $250 toward property taxes, and I'll split what's left between the new car savings category and the vacations category. Now I've set up a plan for savings. As long as I make spending decisions by focusing on the budget, I won't need to worry about spending this money. My budget guides my decision-making process, not my bank balance. If I need to buy groceries, I'll check my grocery category. If I need to buy gas, I'll check the gas category. So now let's discuss what happens when you're paid and you want to put some money towards savings. You probably handle it one of three ways. 1. You have money automatically deposited directly to a savings account. 2. You move some money to savings yourself after budgeting for other expenses. Or 3. You have money automatically deposited to checking and then it's automatically transferred to savings. Let's look at the first scenario. Money is automatically deposited to your savings account. Just record a simple inflow to your savings account. We always want to create a record in Ynab of what actually happened. In this case, money was deposited to savings, so that's what we'll record. Once the account is updated, you need to update your budget, your plan. So budget those dollars to your savings categories. Let's take a look at this in the software. Let's say $100 was just deposited into my savings account. First, I'll click on my Savings Account tab. Then I'll click Add a new transaction. I'll choose Income Available this month so it goes over to the budget right away. My account balance is updated. Now I'll move to the budget screen and assign those dollars to my savings categories. I have 4 categories, and $100 divided by 4 is $25, so I'll just add $25 to each of my savings categories. Now my accounts have been updated, and my budget. Now let's look at the second scenario. You move money to savings after budgeting. This is when your paycheck is deposited to checking, and then after you've taken care of expenses, you move some money to savings. After you've updated your budget, you'll need to enter a transfer transaction to move the money from your checking account to your savings account. Let's take a look at this in the software. I'll record a paycheck on September 2nd for $2,100. This was deposited into my checking account. Then I'll head to the budget and put those dollars to work. First, I'll take care of expenses. There's $200 left available to budget. I'll divide that by 4 and assign $50 to each savings category. The category balances have grown, and now my budget has been updated. Now I'll simply move the money to my savings account. I'll begin in my checking account by clicking Add a new transaction. After entering the date, I'll move to the Payee field and activate the drop-down menu. I'll choose Transfer to Savings from the drop-down options. Notice that Ynab skips the category field. There's no need to categorize this transaction. When we categorize, we are telling the budget that we earned money or spent money. The budget already knows about this money. It was sent to the budget when we entered our paycheck. I'm not spending money. I'm just changing the physical location of the money. Remember, the budget doesn't care where the money is. It just wants to know what you spend the money on. I'll enter $200 in the outflow field. Since I chose a transfer option under Payee, as soon as I hit the Enter or Return key on my keyboard, both account balances will be updated accordingly. Now I've updated my accounts as well as my budget. Now let's look at the third scenario. Your paycheck is directly deposited into checking, and then some money is automatically transferred to your savings account. You can use Ynab Scheduler to make this really easy. The scheduler works like an automatic register. You can set up reoccurring transactions in the scheduler, and Ynab will automatically enter them into the register on the date you specify and at the frequency you specify. So let's take a look at this in the software. So let's say I get paid once a month, and it's always on the 3rd, and it's always for $2,100. This money is directly deposited into my checking account by my employer. I've set up an automatic transfer moving $200 to my savings account on the same day. I'll start in my checking account and open the scheduler at the bottom. Each account has its own scheduler. I'll begin by clicking Add a new scheduled transaction. I'll enter the date of the next deposit, October 3rd. Under Frequency, I'll select Monthly since this deposit happens once a month. I'll list my employer as the payee, and under Budget category, I'll select Income Available this month. Finally, I'll enter the inflow amount of $2,100 and then I'll click Save. At this point, it's important to note that nothing has happened to my accounts or my budget. The scheduler is like the on-deck circle in baseball. These transactions are on deck. At the date I've set, the transaction will be entered for me in the checking account. At that point, I can budget the money. I'll set up a second transaction for the transfer in the same way. The only difference is, under the Payee menu, I'll choose Transfer to Savings as the option. Both of these transactions will now occur monthly on the 3rd. You'll just need to remember to budget the money once the transaction is entered into the account. So what happens when you need to spend the money in savings? Well, let's think about what really happens and make sure we record things accurately. You'll probably make the payment from your checking account, so we'll just reverse the steps. First, I'll transfer the money from my savings account to my checking account. That way it's in the account that I'll be doing the spending from. Then I'll record an outflow from the checking account and I'll make sure to categorize it to the savings category. Let's take a look at this in the software. Let's record a $400 purchase for a broken window that we'll categorize to the emergency fund. I know I'll be paying for this out of my checking account, so my first step is to move the money to checking from savings. I'll record a transfer of $400 from savings to checking. This will get the money in the right account. My account balances have been updated. Next, I'll record the $400 purchase in my checking account and I'll make sure to categorize it for the emergency fund. My accounts have been updated, and so has the budget. Now let's discuss how to record interest. Interest is simply money that you've earned. All you need to do is record an inflow to your savings account and then budget those dollars toward a savings category. In this example here, the $7 was added to the emergency fund. Let's take a quick look at how this works in the software. Let's say my bank paid me $9 in interest. I'd record that as an inflow in my savings account. I'd categorize it as income available this month. Then I'd move to the budget and assign those dollars to a savings category. Some people prefer to hide their savings information from view. To hide your savings categories, click on the title of the category and choose Hide. To view those categories again, scroll to the bottom of the budget and hover over Hidden Categories and click Unhide. Select the categories you wish to view again. Categories that are unhidden always reappear at the bottom of the budget screen. To hide an account, right-click on the Account tab and choose Hide. You can also hide an account by going to Account Actions and selecting Hide. To view a hidden account again, click on the drop-down menu next to View Hidden and choose the account you'd like to view. This concludes our course, Handling Savings in Ynab 3. Feel free to email any feedback to education@younidabudget.com.